Aperture Finance is changing the game when it comes to Uniswap v3 concentrated liquidity management. And as you'll see here in this video, it's allowing me to have higher yields for a more sustainable period of time with more passive management while minimizing my impermanent loss. So in this video, I'm going to cover exactly what Aperture Finance is, its benefits, why you should be using it right now during these current bear market conditions. I'm going to show you exactly how it works by showing you some of my live firms and walking you through some of my strategies. We're going to cover the risk, what they have in the works later on down in their roadmap. And at the end, I'm going to show you how to position yourself for a guaranteed airdrop that they're doing whenever they do release a token. So this is a video you're not going to want to miss. And before we get started, I do have to say that this is not financial advice. Please speak with your financial advisor before making any investment decisions. This video is for your education and entertainment purposes only. Always do your own research. So let's start off with exactly what is Aperture Finance. So Aperture Finance is a management tool that allows you to rebalance your Uniswap v3 positions with the click of one button. They allow you to set up automatic triggers based on a few factors, and they're really positioning themselves to be your partner when it comes to providing liquidity on Uniswap v3 as well as getting the analytics. So to dive deeper into what they are, let's look at their docs and talk about exactly what they're doing. Before we do that, I want to talk about why you should be using this right now. This is a private beta, doesn't charge any fees, should really take advantage. If you guys have watched any of my other videos when I talk about concentrated liquidity, it allows you to provide liquidity when price is within a certain range. So like let's say Ethereum and USDC, you want to provide liquidity in both of those tokens whenever Ethereum is in between the price of 1,000 and 2,000. Well, hey, guess what? You can do that. And this is the best time to be market making because we've been in a choppy market for a long time. So I found the most success through combining trading with yield farming. I'll take some of my portfolio, put it into a liquidity pool, and while price is chopping sideways, because they always say when you're trading, you never trade consolidation. Well, hey, when market's consolidating, that's the best time to yield farm, because whenever the price is between your range consolidating, whether if it's going up or going down, you're making passive income. I think we're going to consolidate a little bit more, at least until election time or probably a little bit before. So it's not a better time to be yield farming while there isn't anything happening in the market. Okay, so let's dive into the docs here. Now, the first thing we're going to go through is their automated rebalancing tool. So on the docs here, they show you everything, but I'm going to walk you guys through this. You can set rebalancing based on 3 different triggers: price, ratio, and time. So when an asset is above or below a price point, it'll rebalance. When a ratio is achieved, so basically saying like if price goes 100% out of range or almost like 90% close to being out of range to the upside or the downside, or rebalance on a pre-scheduled date, which is what I anticipate people will use the least amount. So if we go inside the actual private beta, which I'm going to show you guys how to get signed up for, I'm going to click on one of my firms and use it to test it. Okay, so essentially I click automated rebalancing and I can pick ratio. So for me, this is what I'm doing. I say, hey, once price goes out of range 100%, then that's what I want to rebalance, because that's at that point I'm not making any money. And you can do this above and below price, right? You select the time buffer. So I say if price goes out of range and it's there for 24 hours, give it time to breathe. And then you can pick where you want price rebalance for you. So you can do above and below 1.2% of ETH and USDC. And then after that, you have a gas fee ceiling to say, hey, this is the max amount of gas I want to pay on a transaction. And then you click setup rebalancing, you sign the position permit, and then boom, right? So just to show you what I'm getting on this position, I've been testing out for a little while. And these are the 2 pools that you see on the screen. So right now I'm getting a fee APR of 137% and a total APR of 119. And then for this one, total APR of 125 and a fee APR of 144. That's pretty good. And the only reason why I feel comfortable providing liquidity in such a tight range is because I know that if it goes out of range, it's going to rebalance. I'm not going to have to like be sitting at my computer. However, is one thing that you guys should know is not as clear in the docs yet, but I think the team over at Aperture is going to make it a lot more clear and concise. And before I even go into that point, that's one thing I like about Aperture. Their team is really good at taking feedback and building it for people who are actually using it. Like I went and sat down with the business development guy and McDavid, and really cool guy, chill. He sat down, he asked me like, hey, what do you want to see in concentrated liquidity? And he's sitting there taking notes, and it's like he's building it for me. And you know, one of my favorite quotes is, if you're not embarrassed by the first launch of your product, then you launch too late. So I really love how they're taking feedback from people who are actually providing liquidity and trying to build it with them in mind. So having that said, when you go to set up a rebalance, whatever your triggers are, just know that it's going to do it one time, and then you're going to kind of have to go back in there and set it up again. Originally, I thought that when you set your rebalance triggers, it's going to do that every single time price moves out of range. So like, for example, based on the parameters I just set, if price moves out of range for 24 hours, it's going to set it 1.2% above and below the current price of ETH every single time my triggers are met. But the reality is, it's not how it works. It's only going to do it one time, and then you're going to have to go in there and set your parameters again. That feature that I just described that they're not doing is called perpetual rebalancing, and the team told me that they actually have that in the works, which is really, really cool. So when that happens, I'll be able to have extremely tight ranges. But until then, you know, I have a little wider range, but at least I know that once that trigger gets met, you know, I still have an alarm on my trading view telling me when the price goes out of my range. So, you know, as soon as it goes out of range versus having to go rebalance it, I just go set up the rebalance trigger so that way price is always in my range, okay? And just to give you guys a little more detail on perpetual rebalancing, once they do that, they're gonna have to be able to touch every position in your wallet, including the current ones and the ones you set up in the future on that specific chain. So if you're using this on Arbitrum, your ETH pools will not be touched by the Aperture smart contracts and vice versa. So once that happens, it'll probably be a good idea to set up a separate wallet just for the farms that you have Aperture touching if you want to be safe. So just to clarify, once you rebalance, it's good for one position ID. After the trigger is met, they'll create the new position for you, but they don't have rights to touch the new position or NFT. Another one of their benefits is the automated position closure. You can set up position closure triggers based on pricing, pool ratio, and time. So the same one that you can set up for automated rebalancing, and select the time buffer. This feature is really similar to their revenue earning limit orders, which we're going to dive into next year. But the automated position closure is cool because, like, let's say, you know, tax season's coming up and you want to close out of all your firms by December 21st or December 31st, but you're going to be on vacation. You can set it up to close it out. Or if you want to use it to like take profits, so let's say you're in an ETH USDC pool from $2,000 to $3,000 and you want to take 10% of your profits once it hits $3,000. Well, hey, you take 10% of that ETH and USDC, you put it in the pool, you set up that price trigger, and once it hits the top of your range, boom, you just took profits in USDC and you're out of the pool. So that's pretty cool. They have a pretty cool auto compounding feature as well. So you can set up auto compounding and reinvest your fees back into your position for compounded returns. Let's read this here. Aperture will auto compound your position at an optimal interval based on fees earned versus gas for rebalancing. Aperture also performs the perfect swap required to ensure 100% of your fees make it back into the position. If you ever attempted to manually compound fees, you know that you simply can't zap them back to the position at the perfect ratio. You must first swap some of the fees to get the perfect ratio needed. Aperture takes care of this for you. Okay, so guys, this is cool. Not only are they saving you time here, but they're saving you money. So traditionally, when you go to auto compound, like they said in the docs, you have to take out those fees because the position in Uniswap V3 is an NFT. Okay, it's not like Uniswap V2 or a traditional AMM. You have to take your fees, sell it, and 9 times out of 10, it's not going to be even because the price of ETH fluctuates. And if it's in a volatile pair, both assets are fluctuating. But if it's just ETH, it's going to fluctuate right from the stable coin. So if you had $100 in rewards, you might have $111 in ETH or maybe even $87. So instead of having to take that and then get the even amount, having to, you know, sell some ETH for some USDC, pay gas to do that, and then pay gas to redeploy it back in, Aperture does all of that for you in one fell swoop. This is huge. One thing to note on the rebalancing though is that once you go to rebalance, it's automatically gonna take your fees and auto compound them back into the position as well. So if you want to actually take the rewards from Uniswap instead of auto compounding them back in, you want to deduct those rewards. You can either keep them to your wallet and send them somewhere else, and then you go rebalance. So that way you got your fees. And just to show you what rebalancing would look like, you click your position. So I'm here, you click rebalance. And this looks just like Uniswap V3. Let's say this is your range between these two purple lines and it's out of range. The gray line represents the price, this line right here. Let's say you want to be rebalanced to be here in this area. So now this is your new range. You literally click it, drag these lines, or you can just type in the actual price. And again, the liquidity is in ticks. So if you type in 186, it's gonna round it off to whichever that tick is. And then you just click rebalance now. You don't have to worry about swapping, doing a bunch of math, taking all that time. Like, they really make it easy for you, and they're not charging fees to do this. Another cool feature that they're offering is their revenue earning limit orders. Okay, so like I said, this is similar to automated position closure, but this, and I've made videos on this, on how to get paid to buy the dip. This is a good bear market strategy, or if you're anticipating a drop down. What I'll normally do is, like, let's say the price of Ethereum is at $2,000 and I think it's going to drop down to $1,400. I can provide liquidity from the price range of 1900 to 1400 in ETH/USDC. So I'm going to be in 100% ETH since my price is out of range to the upside. And once ETH price starts to drop and enter my range, the smart contract is going to be buying Ethereum for me. So what I would have to do is basically set some kind of alarm on my phone that says, hey, when the ETH is at 1500 or 1400, and then I have to go to my computer and exit the pool. Like, what if it's a flash crash and I can't get there fast enough? These things happen. Aperture is making it easy because you just say, hey, I'm providing liquidity from the range of 1900 to 1400, and when it gets to 1400, exit to position for me. So even if it just drops down there and touches it, the smart contract's going to pick that up. It's going to take you out of position. You're going to be in 100% ETH. And if ETH goes back up, well, hey, now you're in profit. But even if it doesn't, at least you got to do the thing that you wanted. Okay, so now let's talk about the risks and go through some of their smart contract audits. So I like what I'm seeing here. They've gotten a few different audits: January, April, August of last year, May, and July of this year. So if we take a look at their most recent one, it was 0 findings that was bad, essentially. So that's good. Like, a lot of times you'll see audits, just because you got an audit doesn't mean it's good. Like, sometimes you'll see like critical things that need attention to, but they don't pay attention to. A lot of people just see, oh, they had an audit, it's fine. Like, no, you got to actually go through the thing. So you see a bunch of passes up here, okay, which is really good. And if we go to this one, we see that they had a few things on here that they needed to get taken care of. And they did. Like, this audit was in May. They went and fixed their shit up. They got audited again in June, and it was 0 findings. So that's a really good sign, and it shows that the team really cares about security, which in DeFi, as you guys know with all the hacks, we need that security to be tight if DeFi is going to go mainstream. So I'm not going to go through the other audits. I'll leave that to you, but I like to see that there were things that came up and it was fixed. That's the thing you want to see. So what's the risk in using Aperture Finance smart contracts? Basically, most of the risk is on Uniswap based on how the contract is written. The worst thing they can do is do a bunch of swaps and create high slippage and have you lose money on fees. They can't actually take the tokens from you, because when you swap, those tokens still have to go back to your wallet. So you are susceptible to smart contract risks, but it's mostly on Uniswap. And as you all know, Uniswap is battle tested. They've been around for a long time. They have most liquidity of any AMM on any chain across all chains. So now let's talk about a few things that they have in the works that I've heard from the team. So the first thing is they're going to allow you to pay for gas fees in advance, which is cool. As you all know, gas fees is supply and demand. If network activity is up, then you're going to pay more in gas fees. Even though this is on Arbitrum and mainnet, on mainnet, gas fees can get pretty high. You know, if some project comes out and, you know, they're demanding a lot of block space. So paying for gas fees in advance is pretty cool. They're also supposed to be making some partnerships with certain data and analytics platforms. I think one of their missing pieces is having some kind of UI like how Gamma does, showing that, hey, had you hodled, this would have been your position. Had you been in the pool with this range, back tested across 30 days, 6 months or whatever, this would have been how much you made. So I think the data and analytics is a piece that's missing, but they realize that, and that's why they're going to be partnering with some firms to kind of help circumvent that. And then, like I said, they're planning on doing perpetual rebalancing, which will allow you to set a trigger and it'll be met every single time. But like I said, they're going to have access on each pool you make currently and in the future on that particular chain. All right, so now let's get to the juicy part. Now I'm going to show you exactly how you can get set up for a guaranteed airdrop when they release their token. So this is their Medium article. Aperture's first airdrop, details for our incentivized private beta. So this is their first airdrop. Maybe they're going to do more in the future. So it shows their incentivized private beta will be launching July 10th, which already happened on ETH and Arbitrum for 1 to 3 months. And I'm going to show you guys how to get into this so you can test it out as well. So how can I earn the airdrop and what actions qualify? So they say to prevent wash trading, Aperture is not disclosing the exact criteria, but users who automate normal liquidity provision management activities will be rewarded. And what they consider normal LP management activities are what we went through: the automatic rebalancing, the pre-scheduled position close, the auto compound, and the revenue earning limit orders. Users who place limit or range orders will also be rewarded. Users who do such activities more frequently or with larger size will also have a better chance at getting the full airdrop. What is the full airdrop? Well, they talk about it here. How big is this airdrop? The entire allocation for the private beta is 10,000 Aperture tokens, which is 1% of the total supply. Each user is eligible to receive up to 66,666 Aperture tokens worth $10,000 at their last valuation. Users can also receive more than 66,666 for referrals or content bonuses. Okay, so I'm going to dive into that, but first they talk about how to receive the airdrop and what is an NFA. So shortly after the private beta, users will be able to mint an NFT NFA that corresponds to amount of tokens that they will receive prior to TGE. So NFA stands for non-fungible airdrop, and it's a way for protocols to distribute an IOU for tokens that's tradable on any NFT marketplace. So basically they're going to send you this NFA that says, hey, this is how many tokens are in it, and when it's able to be claimed, you can claim it as long as you have this NFA. There will be approximately 5 types of NFAs. Each will be correspondent to a certain amount of Aperture tokens. And they talk about the different kinds here. However, Aperture will not disclose the exact amount of tokens each of the 5 types of NFA correspond to. Users will know certain NFAs are rarer / worth more, but the exact values will not be disclosed immediately. And then obviously users are free to trade their NFT on secondary marketplaces if they wish to transfer the airdrop rights to a different user. Okay, so now let's talk about the referrals and other bonuses. Referees will get 25% of their referrals airdrop they bring in. So if you recommend someone and they use it and they get an airdrop, you get 25% of it, and it's no cap on the number of referrals. So basically, you tell your friends to share their email address or their wallet address when they fill out this type form. Now guys, I'm gonna put this type form in the description. When you fill it out, just put on there that you were referred by the one and only Crypto Noah so I can get the credit, and then you'll be set up for your airdrop if you use it. And then lastly, Twitter or Medium bonus, Aperture will also award 3,333 tokens or $500 for beta users who submit quality Twitter threads or Medium articles about their LP strategy and how Aperture's tooling was used. Or it can just be a general thread on our tooling and not discuss your own strategy. That's the end of the video. Let me know what you guys think. Let me know what strategies you're using Aperture for. Let me know your feedback. Maybe something I did wrong, some problem you're experiencing, some bug, so that they can make this thing better for us liquidity providers so we can make as much money as we can. So if you got value from this video, please consider subscribing, drop a like to help support the channel. Join the Discord. We love to meet you and talk about more strategies, more yield farming, etc., etc. But until then, thank you for tuning in. I love every single one of you, and I'll see you in the next video.